Well guys, officially the Uber IPO has happened and it has been an absolute disaster. I want to go ahead and talk about this Uber IPO, why it has been such a disaster, and I want to talk about if I'm interested in buying the shares here and now, guys. So I hope you enjoy this. As always, make sure you hit that thumbs up button. Let's start getting into this, guys. So if you remember back in October of 2018, okay, what is that, 8 months ago or so, basically Uber was talking about going public at a valuation of around $120 billion. And this was thought to be something that might happen, and basically then after that, the markets got really weak in November and December. Obviously, the stock market had a really rough time. And then, Uber started to have maybe some thoughts about when they do go public, which was possibly in the spring, maybe it was for a little less valuation. And then all of a sudden, we fast forward to April, and Uber was starting to talk about a valuation of up to $100 billion. And that's in April this year. So between October of 2018 and April of 2019, basically Uber's valuation, they brought it down by about $20 billion, okay? So that's a massive, massive difference in a very, very short amount of time. But the main reason why Uber brought down that valuation was because of how bad the Lyft IPO went. If you didn't know, Lyft is their main competitor. Lyft IPO went ahead and happened just a couple months ago, and that IPO at first looked like it was going great, okay? So Lyft went public with a valuation of just over $22 billion. Keep in mind, Lyft is a very tiny company. If you compare it to Uber, they're a fraction of the size. So Lyft, a much smaller player, but they went public for at about $22 billion. The first day trading went fairly well overall. But since that time, it has been a disaster for Lyft stock, okay? So IPO is around $87, roughly somewhere around there that first day. And then you fast forward now, which is basically they went public at the end of March. Now we're in about mid-May. And where's the stock? It's at $52. So the stock went from $87 where it went public less than 2 months ago to now the stock is trading at $52. That is an absolute disaster of an IPO. Usually when a company goes public, if anything, they want to see their stock price going up over time. To have it go down, and not just down, but in that dramatic of a fashion, it's insane, okay? So this made Uber start to think, you know what, maybe we should bring down our valuation even more, okay? So here we go. Very recently, just as a couple weeks ago, Uber was talking about going public with possibly a $90 billion valuation, and this was as Uber drivers were planning to strike, and I believe some Lyft drivers did as well. So then they were talking about, okay, maybe around 90 billion is about right. Yeah, a few months ago, we were thinking about 120 billion. Then we were thinking about 100 billion. Then Lyft happened. Now we're thinking about 90 billion. You know what? Now maybe we should even bring down that valuation to about $80 billion, okay? So now keep in mind, this isn't just like Uber making this decision, okay? This is Uber, the investment bankers, investment world, kind of talking about what the demand could be, what Uber's true valuation should be, and all those sorts of things, okay? So now we're in a situation where literally a few months ago, it's a $120 billion valuation. Now, maybe 80. And then we get to today, the day the company actually goes public. And what valuation does the company end up going public at, okay? So Uber began trading on the New York Stock Exchange Friday at $42 per share, below its IPO price of $45. Let me stop it right there. That is very rare, okay? It's very rare for companies that go public for their shares to trade initially lower than basically what they IPO'd at, okay? That's just a very, very bad sign in general, okay? Especially when the stock didn't even open up, okay? The stock was down more than 4% toward the start of trading. Uber priced its shares Thursday night toward the low end of its target range of $44 to $50 per share. And as we just talked about, this trading at $42 right now, so it's trading literally lower than their lowest target range, okay? That gave Uber a valuation of $75.46 billion at its IPO on a non-diluted share basis, still well below the $120 billion it was reportedly seeking just a few months ago, okay? Toward the beginning of trading, Uber's market cap was around $72 billion, guys. So think about this. This is just crazy, okay? $120 billion valuation talking about just a few months ago. And it was like, yeah, that'd probably go public somewhere around there. And today you can pick up the company for about a $72 billion valuation. Massive, massive difference, okay? Now, part of this I could blame on the markets in general this week. Obviously, it's been a bad week for the markets. And the markets are pretty weak today, but it's not like the market is a disaster today. It's not like you can say, well, the stock market is an absolute disaster today. That's why the stock is down. No, the stock market is down today, but the stock market has down days all the time, okay? And companies go public and usually it works out. But here in Uber's situation, it's obviously just been a complete disaster. Basically, before the company even went public, to keep bringing down your valuation from 120 billion, then it's like, oh, 100, then 90, then 80, then you go public and it's 75, and now the stock's trading at $72 billion valuation. That's obviously a showing of weak demand for people wanting to buy shares out there, okay? Now, like Lyft, the CEO said 2019 should be the company's peak year for losses, all right? Uber has been comparing itself to Amazon in its pitch to investors, which also infamously was not profitable at its IPO. While some analysts are dubious of the comparison, they also recognize investors' fear of missing out on the next big thing. In the CNBC interview, the CEO said he stands behind the company's comparison despite the differences between the two companies at their IPO. And everybody wants to compare themselves to the great, okay? Every football player that gets drafted, they want to compare themselves to the great already, okay? Or the announcers or whatever. It's just the way it works. And you got Uber here trying to compare themselves with IPO, and I will say it's dramatically, not just dramatically different business models, but dramatically different at the stage of IPO. Uber, although they brought down their valuation a massive amount over the last few months, still talking about a company that has a $72 billion valuation as of right now, right? And a company that is a very, very big company as of right now. Amazon, on the other hand, when Amazon went public, this was a teeny tiny company. They had under $16 million in revenue, okay? And Amazon had a valuation of around $300 million roughly, okay? So these two companies were dramatically different at IPO. Personally, when I look at Amazon and I look at Uber, I don't like the comparison there in my personal opinion, okay? And you think about even the business models, very different business models. Obviously, Uber's a very, asset-light business model where they don't own the cars, they don't own the drivers, they don't own really anything, okay? Whereas Amazon, you think about Amazon, they have these massive warehouses, and a massive amount of these massive warehouses, right? All over the world. These are owned by Amazon, right? You think about the employees, these are, direct employees of Amazon that come to work every day, right? Whereas we think of Uber's business model and it's like, where will they even be that many employees in the future with autonomous vehicles and things like that? Two very, very, very different business models. And you think about even Amazon Web Services and all the infrastructure they own for that, right? Once again, very, very different business model in my personal opinion than Uber. I don't think they should be compared at all, just because the business models are massively different. And on top of that, when they went public, they're just two totally different companies. Amazon was a teeny tiny company, and then Uber's a massive Goliath company, okay? So they should not be compared in my personal opinion, other than, they were both unprofitable when they went public. So aren't like half these companies, or more than half these companies that go public are not making money, okay? So if I'm looking at Uber stock, is it a stock I'm interested in buying at this point in time, okay? So if we think about Uber's business model in general, they're kind of, they have a few different businesses, but at the end of the day, my mind automatically shifts to kind of Uber's, obviously the ride sharing business, right? And that's a massive business. And especially in big cities, when we went on vacation to San Francisco, that was a month or two ago, I saw the power of Uber in going to San Francisco, for instance, because we drove a vehicle to San Francisco and we almost never drove that vehicle. It was way more convenient and arguably maybe even cheaper because how much parking rates were for us to take Ubers everywhere. And I think we took 14 or 16 Uber rides in a matter of just a few days we were there, okay? So Uber made, a lot of money off us in a very quick amount of time. And I kind of got to see the power of Uber. And, here in Las Vegas, maybe you could take Ubers on the strip, but for the most part, most people own cars, so you don't really see the need to have a service like Uber here, because it's like the suburbs and, you drive a long way to go to pretty much anywhere. San Francisco is so congested, you can see the power in these big congested cities, you see the power of Uber. And then not only that, I kind of think about Uber Eats, which is a very intriguing service, which is obviously a food delivery service. And the question is, who's going to be number one in food delivery? That's going to be a massive market going in the future. Who's going to be number one there? there, I think Uber's got a great opportunity to be the number one player there. So, and there's a few other businesses Uber has going and things going around internationally and whatnot, which is exciting. But I'm kind of thinking about their ride-sharing business in the developed world mostly, and I'm mostly thinking about Uber Eats overall. So if I'm looking at Uber, very intriguing business model to me, very intriguing company. Possibility that I could buy Uber shares at some point in time as kind of a spec play, okay? Kind of a speculative play. Now, they're a massive company to be a spec play, but at the end of the day, they don't make money, so I consider it a spec play, okay? I could kind of look at this as I own Tesla shares, obviously. If I own Uber and I own Tesla, then I kind of own the two companies that are probably going to be the main players, in my personal opinion, of autonomous driving in the future and this whole ride-sharing ability and whatnot. I think I think these two companies have a great opportunity to win that. I think Tesla has a great opportunity to kind of be the number one. And then if I'm looking at number two, I'm looking at Uber's experience in this. And as long as they can partner with somebody that's got full autonomous, vehicle capabilities and whatnot, I think Uber could possibly be, a massive number two. And those could kind of be like the two main players. So it's a possibility I could go ahead and buy some Uber shares here. I'm much more interested now that the valuation has come down considerably. Then now maybe it makes sense for me to go ahead and say, hey, at a $70-something billion valuation, maybe it's worth picking up some shares as kind of a spec play. Once again, they're losing money and they probably won't make money for at least in the next, I would say at least the next 2 years. I wouldn't expect them to make money, but just because they don't make money right now doesn't mean they're not going to make a lot of money in the future. Now, if I do look at their business model, it is a business model I could see them making a lot of money in the future. Why? Because there's only one other main competitor right now. It's Lyft. So over time, Uber and Lyft are going to be able to raise prices substantially. Like, that's just very obvious to see. Same thing's going to happen in food delivery. There's going to be 2 or 3 main players there, and then costs, and then obviously they're going to start, rolling in the profit because they'll be able to kind of raise prices a bit. They'll be able to kind of figure out that business model, what's the best way to do it and whatnot, and then there'll be a very profitable business in the future. In my personal opinion, it's going to take a few years to get there. So yeah, I might buy it as a spec play, guys. We'll have to see. I might kind of like that combination of having some Tesla shares and having some Uber shares as kind of my more speculative plays. Two very big companies that are doing big things already, so they're much less speculative than most of these spec stocks out there. So I don't know, guys. We'll have to see. I'll update you if I do buy some Uber shares. I'm much more interested at $120 billion. Not interested at all. $70 billion? Maybe it's worth me picking up a little bit of shares, guys. So hope you enjoyed this. As always, be sure to check out the other channel, Financial Education 2. I got some videos coming tonight on that channel, all right? Thank you for watching and have a great day.